The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
All right. Well, I think looks like the major indexes have taken a few flying lessons today and yesterday. So interesting to see. So you know what that means. It means all the problems in Europe are solved. Everything's good. I'm joking about this if you listen to the show. I definitely subscribe to that theory of really doesn't matter what's driving the market's gains. Back in the late part of April, when the market had gone into a very short-lived rally, beginning on about April 25th or 26th, only lasted for maybe a week, 10 days or so. I don't have all the, let's see, I have an IWM chart in front of me, and that's not really going to tell me exactly as accurately as something like the NASDAQ or the S&P, but I had a friend come over one of those days and asked me what's causing the market to go up. And, my answer surprised her. I said, it doesn't matter. It really doesn't matter. It just is. And that's not kind of what people are used to hearing. That's not what gets drilled into our minds with all the news. I mean, all these channels obviously need to fill hours and hours and hours of airtime with content of people analyzing what's going on. And I've said it here many times before. That kind of fundamental forecasting, macroeconomic forecasting, that's the academic side of things. That is what folks learn in school. That is what you learn in these business school finance classes, at least on the fundamental side of it. That's what I certainly learned. I took all those classes. I mean, as sort of, is it interesting as sort of an exercise in income statement analysis and kind of looking at the innards of a company? Sure. Well, yeah, it is. I'm not going to deny that. It's kind of fun if you have that sort of geeky curiosity the way I do, and I mean this in the best possible way, the way I'm sure many of the listeners out there do, and I do mean that as a compliment. But just in terms of looking at that as what drives a stock price, well, as you know, I do enjoy having a lot of the mutual fund managers coming on here and talking about what stocks they like, what they hold in their portfolio, and why. And don't we hear it over and over again? They are buying on the fundamentals. Now, it doesn't necessarily mean they're wrong because in terms of what they're buying, because a lot of times we do see the names that they enter into based on fundamental analysis. Well, they frequently are among the market gainers. However, what they're doing that you and I don't have to do in our portfolios is they are sitting through some pretty lengthy either market downturns or just lengthy periods of time in which the stock they have so much confidence in is going nowhere. So we don't really have to do that. We don't have to let our portfolios go into that languid zone. We can do a little more. The style that I do is really, for lack of a better term, a lot of people call it swing trading, or I've also heard it sort of less jargony, just described as short-term or medium-term investing. Could it be long-term? Yeah, it could. It could. An example would be a stock like Apple, for instance, where perhaps, let's just say, for sake of discussion, say you entered into an Apple trade in 2009, March 2009, when the market moved out of that downturn, and you have a nice cushion in the stock, and you have held through the subsequent pullbacks in that particular stock. So that's an example. That's the kind of thing where, if you're willing to do that. Now, with the smaller cap stocks that I focus on here on this show, and in the lower price names that we also feature in the Low Price Leaders newsletter, I'll talk about that in just a couple minutes here. But with a lot of those names, you really do want to use a bit more aggressive risk management. Cut back on your positions ahead of a company's earnings report. Remember, with the smaller cap names, a lot of them can be a bit more illiquid than some of their larger brethren, and they can deliver a very nice pop in a market uptrend. They can be some of the price leaders in a market uptrend. But when you're talking about a market downturn, a lot of these can correct at a rate higher than the major indexes. Not to mention the fact that you never do know what the major indexes are going to do in a correction. And again, kind of coming back to what I opened the show with, my favorite rant, really, is all the predictions, just where somebody thinks the S&P might find support. I mean, it's interesting to watch support levels, interesting to watch moving averages, because those are some technical indicators that can show you something, but nonetheless, it doesn't mean your pet thesis on that is necessarily going to be true, and you have got to be prepared for that. So I've put a chart, let's see, as I mentioned a few minutes ago, of the IWM, the Russell 2000 ETF. I put that up there on Tiger TV. And right there, let's see, I've got a daily chart. You can see that it is, there you go. That's kind of what I was talking about, is you do often see these support levels, and not to predict what's going to happen with absolute certainty, but these support levels can often be some kind of indicator that can help you gauge market health. And you can see on the IWM chart, support at that 200-day line. Bounced off of that, showing another upside day of trade today. So what else do we have going on here? Facebook, seeing some selling today. Now, talking about support, that was very interesting on Friday. Watching the phenomenon of institutions trying to support their position. We saw that repeatedly on Friday, and according to what I was seeing, it was Morgan Stanley. That's what was being reported in the news, and that makes sense, because Morgan Stanley was the lead underwriter, so you don't have to go too far out on a limb to guess that it was them, and I guess they were the ones who were designated to support the price that day among the underwriters. So they were trying feverishly to maintain that price level of $38 on that day of the IPO on Friday. They did succeed. They kept jumping in there, buying shares if it did dip too low, so they really did an exemplary job of holding that price level at 38. Now, of course, we're not seeing that today, and this is why you don't buy IPOs. What will this stock do? Who knows? What's the point in predicting? Is it going to keep falling? Will it rise at some point? Sure, it'll rise at some point. But let the charts tell you, and the chart is telling you. Let me see here, just for fun. Got a bunch of different monitors up here in front of me. I'm going to put FB, the ticker, up there. So there you see, today's the third session of trade. So there you see what it's doing today. So so that's just why you don't buy IPOs. Imagine how many retail investors jumping in there when it began trading, when it rallied up to 45, I believe it was, on Friday, and then started pulling back. You want to just give this a trading history, and that's true with any IPO. What's the one I talk about here sometimes? It's a small cap name that I have liked the chart action, pretty good support there, but nobody's ever heard of this company because it's not a glamorous consumer internet play. This is Thurman Holdings, small cap company. They make like pipes and insulated pipes for industrial use. Now this stock here went public, I'm talking about Thurman Holdings, went public at $12 a share a year ago. Back in May 2011, did have, you can see it a little bit here on the chart there that I put on Tiger TV, had that initial pullback. Now, do you think that the entire media was focused on the pullback in Thurman Holdings after its IPO? Fixated on every tick? I don't think so. I think we all know the answer to that rhetorical question. But look what happened here. So really, after the stock got its footing, kind of after the big market downturn in the summer of 2011, it's had a nice rally higher. I want to put it back here on a daily chart. You can see this here, so you can see that it's trended very nicely above that 50-day moving average, kind of a little bit below that right now, kind of hovering near that line, getting support in the 50-day-ish area. Okay. The reason I'm showing you Thurman, and this one has some nice fundamental estimates. I do not use those to determine buy or sell points, but it is just a nice gauge of the confidence that the institutions have in a given stock, like the mutual funds I was talking about a little while ago. If these guys see good fundamental potential in a company, it is going to catch their attention. And this could be one of the names that they jump into. Now, Thurman is pretty thinly traded, about 110,000 shares on average. Small market cap, about 635 million. The reason I wanted to show you this was just to put the Facebook fixation in some kind of context, that what you saw happening there in Facebook in the last few sessions, what is currently happening, and what is happening in some kind of little unknown poor orphan stepchild thing like Thurman, that I personally like and think is an interesting watch list stock, but not one that the media is going to be fixated on. So it did the very same thing. Very, very typical. So, again, now the tone has changed from Facebook being the hero to Facebook being the GOAT in the media. And I'm not going to buy into that either, because what it's doing now is really not atypical of what you see in many IPOs. It's just that this one just seems to be the focus, and I guess maybe I'm doing it too. But I just kind of I enjoy watching what some in the media are doing, and kind of being a little bit of a I don't want to use the word, maybe skeptical. Yeah, a little skeptical observer. Okay. Let's see here. I want to remind you about the newsletter, Low Price Leaders. We've got a break coming up here in just a few seconds. But during the break, check out tfnn.com, the homepage, Low Price Leaders, and you can get some information about taking a trial for the newsletter. I'll talk a little bit more about that after we come back from the break. I'm Kate Stalter. This is the Small Cap Roundup. Take a listen to Tom Petty. We'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, welcome back to this segment here of the Small Cap Roundup. Just taking a look at the euro. We have U.S. indexes higher despite a lower euro. Okay, that's a little twist. You don't always see that. All right, so I was talking about this the newsletter that we launched about 5 or 6 weeks ago, not too long ago, and it's called the Low Price Leaders. And you can check that out, information about that on TFNN.com. Now, we do have a couple of trades on right now that did not trigger sell signals. And remember, with some of these smaller cap names that are lacking in liquidity, now, I mentioned this a little bit before the break, small caps can deliver a big pop for a lot of reasons, but they're often illiquid. So they can show a larger decline than the wider market in an overall market downturn. So you have both upside risk and downside risk. And that's kind of funny because in ordinary conversation, people don't use the term risk when it relates to the upside. It kind of tends to have a negative connotation, doesn't it? But, you know, in statistical terms, taking out the emotional component of the word risk, you have that on both sides, and in particular, got to be a little bit careful of that when it comes to these smaller names. Now, with the upside trade that we're seeing on the major indexes yesterday and today, what I did after the close yesterday, I wanted to take a fresh look at some stocks getting moving average support, 50-day support in particular, although, frankly, some of the shorter-term moving averages, the 10-day, is actually a more bullish indicator, but I wanted to just start by looking at the 50-day just to give me an idea of what might be setting up. And I wrote a piece for moneyshow.com on that topic. As many of you know, I do quite a bit of work with them. Speaking of Money Show, I want to come back and talk about some of these stocks that I was noticing after yesterday's close. I will be at the Dallas Traders Expo from June 6th through 8th. So that's a Wednesday through Friday. I believe the expo actually runs another day on Saturday, but I'll be there Wednesday, late Wednesday through Friday. And I'll mostly be in the studio doing interviews. I won't really be at the booth very much. There's 1 hour. I'm going to be there at the booth between 1:30 and 2:30 p.m. on Thursday afternoon. So if you are in the Dallas area, stop by and say hello. It'll be at the Hyatt Regency Dallas at Reunion. You got to look that up. I don't really know Dallas. I'm just going to get in a taxi and they're going to take me there. But it's at the Hyatt Regency Dallas at Reunion. And admission to the main event is free. There's some paid workshops with guest speakers. So check out the Traders Expo website for more info. Now, I heard a rumor. I have not confirmed this. I heard a rumor that Tom O'Brien would be at the Dallas Traders Expo for, I'm guessing, maybe one day, part of a day. I'll try to get more information on that. And if I don't have it today, I'll try to update you on that on Thursday. Perhaps he might be there. But if you're in Dallas, please stop by Thursday afternoon and say hello. I'll be at the booth, moneyshow.com booth, 1:30 to 2:30. I'd love to meet you. Okay, let's talk about moving averages. Let me start off here with a small cap. I noticed what I was doing, I was kind of tracking across the board, just sort of all market caps when I ran some of these screens yesterday. So let's see here. I want to put up a chart for LQDT. This is Liquidity Services. Now, this is an interesting company. It's small cap. It's one that I've been watching for quite some time. It's had a pretty good price record. You can see right there what it's doing. I put it up there on Tiger TV, and you can see that it's pulling back from an all-time high. Pretty sure it's definitely a multi-year high. Yeah, that's an all-time high. Just wanted to check that on a monthly chart. And you see there it's pulling back from that, which it reached in the later part of April, or actually early May. Big pullback here, but look at that. Nice support right there at that 50-day moving average. And some nice upside trade in recent days. Now, this stock, as of today, is a little bit above that 10-week line. You know, that's a very bullish indicator right there. Unfortunately, we are not in a confirmed uptrend in the market, so downside risk is still a factor. So, all right, we've got our break coming up right here. We'll be right back after these messages, and we'll look at a few more of these stocks here showing 50-day support. I'm Kate Stalter. This is the Small Cap Roundup.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
You've heard Tom O'Brien on the air and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
We are back, and I've still got the chart up there of liquidity services. Just kind of want to finish up with this a little bit. Let's see. This is a small cap that is, as of today, getting a nice price boost today, up about 3.7% so far in Tuesday's session. This is an online liquidator of salvage goods, overstocks, that kind of thing, business to business, not a consumer-facing company. Good double-digit earnings growth estimates for the next couple of years. Again, shows you the degree of institutional confidence. Market cap of about $1.9 billion, moves about 500,000 shares a day. Now, that was one of the things that I decided to do last night after I wanted to, as I mentioned before the break, I wanted to run a screen of some of these stocks that are getting support above the 50-day average. I wanted to use some of these fundamental screeners just as a way of showing names that do continue to deliver the earnings growth that attracts these institutional investors. I also was looking for a certain degree of liquidity. I set my scan at 300,000 shares traded per day on average. Now that's going to knock out a lot of these smaller cap names. That's going to knock out many of these lower price names that do tend to be thinly traded. Liquidity Services was one of the small cap names I came up with here. I had also an interesting one, couple others. This is one I've talked about and I've been watching for a while now, is Cirrus Logic. CRUS. They do some of these audio chips involved with some of the voice recognition and for Apple and also other audio technologies for other clients. Now you can see right there, I put up the chart on Tiger TV, you can see nice support right there above that 50-day line. Now Cirrus Logic definitely is one of these that I was keeping an eye on. Market cap a little bit shy of 1.7 billion, so it definitely falls into the small cap categorization with a market cap less than 2 billion. I mean, just amazing liquidity on this one for a smaller stock. 2.3 million shares traded a day on average. You know, it's the Apple Association has attracted quite a bit of interest into this particular name. It is one of these kind of follow-on trades. That's funny because as many of you are well aware, I worked with Bill O'Neill over at Investors Business Daily for 10 years and have read the book How to Make Money in Stocks many times. It's one of the very influential stock books that I've read. There have been many others, but that's one of them. And it's one of the things I just love. You watch a lot of these guys on television. I guess they learned in business school somewhere the term second derivative trade. Well, Bill O'Neill, being kind of an old school guy, he calls it a follow-on trade. I think he also calls them cousin stocks in some cases, where maybe it's a related industry. Isn't that just a lot nicer? Cousin stocks or follow-on trade. And then, you know, you get these guys, oh, second derivative. Oh, you sound smart. Okay. I have fun with this stuff. You can tell. I just have a lot of fun listening to this. And nothing, I mean, look, a lot of these guys, they're I met some of them. They're nice people, smart guys. I just think the jargon can be kind of funny at times. So Cirrus Logic, follow-on trade, second derivative, whatever you wanna call it. Good liquidity in this particular name. Let me just see. I've got it up there on a daily chart for you on Tiger TV. So right now, this one is nicely above its 10-day average. It's at about, let's see, the 10-day line is around 26. This one is trading at about 26.98. Now, a possible midpoint when it comes to some of the technical resistance could be right here where I'm indicating. And I'm not looking at any particular IBD-style chart pattern. I just want to tell you that in case anybody thinks that's what I'm doing here. That's not what I'm doing. I'm just looking at some midterm resistance right here at about $27.13. So, you know, for more aggressive traders, that could provide an entry point. However, be aware, we are not in a confirmed market uptrend. You know, there's just way too many potential shoes that could drop when it comes to our friends on the other side of the Atlantic over there, in particular. You know, the folks that make feta cheese and that nice creamy yogurt. I'm talking about Greece. So there's just a lot that could happen, and we do not yet have a confirmed rally in the major indexes. You have some midterm resistance right up there at 27.13. You've got the stock moving above its 10-day line. In a bull market, I would be very enthusiastic about this particular name right now, and who knows, we might get a confirmed bull market. You know, I'm not at all sitting here making a prediction that we won't. It's just till we see it, we don't see it. So it's not there yet. Okay, let me move on. Let me show you another chip sector name, and this is actually by the definition that I am using in our Low Price Leaders newsletter, I use the definition of stocks with a market cap of under $2 billion as being the small cap. Now, this one is kind of right on the edge. Mellanox Technologies, MLNX is the ticker. Market cap of about $2.4 billion. Much less liquidity on this one than we just saw in Cirrus Logic. About 487,000 shares a day traded on average. This is an Israeli-based chip designer. It's one of those fabless, not fabulous, but fabless, meaning they don't manufacture the chips. They do the intellectual property designs, a lot of the R&D into the intellectual property. So they design chips that are used for data switching and the telecom industry, also with some storage applications. Now, this company, let's see here. First of all, let me talk a little bit about what we've got here on the moving averages. If you see there, if you're watching Tiger TV, you do see holding very nicely above that 50-day line. The stock gapped up here on earnings. Nice big gap up and enormous volume. Now, we had some shaky market conditions, so not unusual to see what we saw here with the stock pull back from that and consolidate. You notice did not close that gap. You've got your 50-day line moving higher, of course. And right now, you do have this one trading above its 10-day average. Let's see here, about 5% above that 10-day. So this one too. This is another one of these names that in a bull market, I may be quite enthusiastic about this. You've got expectation that this company will more than double its earnings growth to $2.25 a share this year. That's supposed to slow down somewhat next year, but it's still in the low double digits. Now, again, kind of taking a look at some of the resistance in this thing right here. You had some resistance just below that $60 level, and it has cleared that today. So really, we're seeing some pretty good technical action in some of these stocks. That's very encouraging to see. When you have these stocks that are good fundamental performers that have held up very well technically, even during a market downturn. So you do see some of these are showing some very bullish signs right now. Little premature to get too enthusiastic just because of the general market. But the reason that I look at these, and the reason I'm showing you some of these today, these are exactly the names to be screening for in a market downturn, because they can be the ones that do emerge as some of these next leaders when you do have a fresh market uptrend that will, at some point, inevitably occur. I know we got the small cap show here, but I want to just, I'll show you a large cap that did pop up when I was running some of these screens last night, and you know this one. This is Expedia, EXPE, and it's pretty interesting because Priceline tends to be the S&P 500 component, online travel site. Priceline tends to be the one that everybody fixates about, but really Expedia is performing much better right now. Let me put a Priceline chart up there, and we can do a very quick comparison right now. So let's see. There you see that Priceline. Yeah, it's not horrible, but it's below that 50-day line, hovering above the 200-day. So let me go back to Expedia. Okay. And you can see how this one here, now again, you've got a little bit of interim resistance that this one was hitting. Let me see, 43.22. So looks like today it's really within pennies of that. So again, some pretty bullish price action in a stock that is showing some market leadership right now. let's see, we've got this one is almost 4% above that 10-day average as of mid-session trade here today on Tuesday. Okay, so just wanted to show you that. One of the things that I do is I don't look at the small caps and low price names in a vacuum. You really have to look at them in conjunction with the overall marketplace and what the major indexes are doing. So I'm never going to only be screening for the small caps. And frankly, that's not all I hold in my portfolio. It's obviously the focus of the newsletter and the focus of this show, and can be an area of tremendous potential in a bull market. Now, I just realized here I have neglected to give out the phone number today. 877-927-6648. Give a call, 877-927-6648. We can put a chart up there if there's a stock you want to talk about. We've gotten some very interesting questions. Had a lot of calls on Thursday with some very interesting questions, and that was a lot of fun to talk to a lot of people. Let me pull up a chart here that I have kind of been watching in the last few days. Now, this is the ticker there is BOX. C-Cube Container Leasing. Now, this one here, it's exactly even with its 10-day average, and you can see on here that average and the 20-day, the 10-day was moving a little bit lower here when you had a couple of these big declines. Now, here's what's interesting. Look where it got support. The blue line, if you're watching there on Tiger TV, that blue line is your 50-day moving average. And one of the things, I talk about that a lot as an area of support, and about how the institutions do like to step in to support their existing investment. And this one, by the way, let me just give you a little background. C-Cube Container Leasing, refrigerated containers for the shipping industry. I mean, you see all these things a lot of times. Trucking and the rail industry, you see these containers kind of hanging around. A lot of times they're by ports. I think if you're by some of those ports there in Elizabeth, New Jersey, they're just stacked up like crazy. You see those things everywhere there. It's in addition to IKEA. That's my memory of Elizabeth, New Jersey. So in any case, this particular company, very small, market cap, 371 million, moves a little over 100,000 shares a day. So as you could imagine, it's fairly sparse institutional ownership, but you do have more than 100 U.S.-based hedge funds and mutual funds owning shares, terrific double-digit earnings growth driven by solid revenue growth. That's what you want to see. So got a lot of good indicators here. Now, one of the reasons that the institutions like to step in at the 50-day is because they very often perceive a more attractive valuation at those levels. This has a, let's see, PE ratio pretty low at about 9, but nonetheless, the institutions like to step in there because by their valuations, that is a more attractive place where they can justify, according to their models, another buy. So that's why you see that a lot. So that's another one of these that I wanted to show you. And we'll come back, look at a couple more stocks, one more segment today here on the Small Cap Roundup. I'm Kate Stalter. We'll be right back.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
We're back today. Markets are, they're still learning to fly. They've kind of come down to a little bit of a lower altitude, but after the European close and the daily round of scary news out of Europe, there's always something. Got the euro lower. I saw something there crossing my TV screen there a few minutes ago about some, I didn't really look at it too carefully, but I guess some secret ECB funds being used to prop up Greece. I mean, I don't know how they work that, how secret that can really be, how they're going to get away with that, but in any case, not a surprise that there's additional ECB financing propping up Greece. So that may have scared people a little bit. I noticed that indexes seem to be kind of ticking a bit higher right now in the past few seconds. Maybe everybody's kind of digesting that news that, hey, not surprising to hear that there might be some additional financing propping up Greece that we did not know about. Okay. So, let's see here. I put up a chart there on BYI, Bally Technologies. Now, this is a Las Vegas company, makes gaming equipment, sells to the casinos, market cap, a little bit shy of $2 billion, moves about 437,000 shares a day on average. Now, this is one, obviously, taking a look at this, you're going to see this did not show up on the scans I ran last night when I was looking for 50-day support. This is really just kind of one of my screens that has some looser parameters regarding some of the small cap names that I am looking at as potential watch list candidates. Let me put this here on a weekly chart so you can kind of see the consolidation that it's forming there on a weekly basis. And by the way, this is that's a 50-week moving average. Doesn't really tell you very much. Little bit too long term, but you see that it is getting support well above that. So that's looking pretty good right there. Now we had here, let's see, in this last consolidation back here that I'm indicating, this fell to a low of, let's see, 42.46, and in the current consolidation, well above that. So we do not have this one so far undercutting that prior low. Okay, we had the low, actually that was earlier today, it looks like. Yeah, earlier today, 43.53. So still holding above the low of this previous consolidation. So really not enough to necessarily flush out any of the institutional holders or traders who hold fairly large positions who might not have so much confidence or want to just sell out and buy something else. So kind of still watching this consolidation here taking shape. Good estimates when it comes to the earnings growth. Let me just take a look at what the sales looks like. Yeah, pretty good sales growth that's been growing, and that's one of the keys to these small cap names, is you want to see earnings growth spurred by sales growth. And of course, when you had a little bit of a decline there in 2010 and another decline there in 2011. You had some few problems in various aspects of the gaming industry in the past couple of years or so. So their sales actually were declining on a year-over-year basis, but they're growing again. And let's don't forget Macau. If this is a company that sells into Macau, you would have some good growth coming up there. So this is one I'm going to be watching, checking into a little bit more. I really just kind of started noticing it this morning. I'm Kate Stalter. This is the Small Cap Roundup. Check out the Low Price Leaders newsletter, tfnn.com. Don't want to miss that, and I will talk to you again on Thursday, same time.